Hey everyone, welcome back to Corporate Decoder. Today we're diving into the latest filing from Abercrombie and Fitch. Spoiler alert, it looks like they're planning a major shopping spree, but this time they're buying back their own stock. Is this a sign of confidence or something else? Let's find out. This report is from March 5, 2025. That's the date Abercrombie and Fitch needed to tell the Securities and Exchange Commission, or SEC, about some important stuff happening in the company. Think of it like a company's version of a news dump. First, the report talks about how Abercrombie and Fitch did in the last 3 months of the year, their fourth quarter, and for the whole year that ended in February of 2025. These are unaudited results, meaning they haven't been checked over by outside accountants yet. They also provided some extra financial details going back to the year before. This helps investors compare how the company is doing now versus how it did in the past. It's like looking at a report card to see if you're improving or falling behind. There's also an investor presentation linked in the report. Companies often put together slideshows for investors, highlighting the good news and explaining the not-so-good news. It's all part of keeping the people who own the company's stock in the loop. The report includes a transcript of a conference call. After releasing their results, company leaders usually host a call where they talk about the numbers and answer questions from analysts. This transcript lets anyone read exactly what was said. Now here's the big news. Abercrombie and Fitch's board of directors approved a plan to buy back $1.3 billion worth of the company's stock. This new plan replaces one from 2021. Companies often have these programs in place to buy back shares of their own stock. The company can buy back shares whenever it wants, either on the open market where anyone can buy and sell stock or in private deals. They can use different strategies, including something called accelerated share repurchase programs or Rule 10b 5-to-1 trading plans. These are just different ways to buy back a lot of stock quickly or automatically. But they're not just going to buy back stock blindly. The company will look at things like how the stock market is doing, what their stock price is, and what the law allows. They can also stop the program at any time. Buying back stock can be a good thing for shareholders because it reduces the number of shares outstanding, which can increase the value of each remaining share. It can also signal that the company thinks its stock is undervalued. Finally, the report is signed off by Robert J. Ball, who is the Senior Vice President and Chief Financial Officer of Abercrombie and Fitch. This just shows that the company is standing behind the information in the report. So what does all this mean? Well, Abercrombie and Fitch just released its latest financial results and announced a big plan to buy back its own stock. Let's break down the financials and then we will get into what it might indicate about the company's health and future. I was not able to find the direct financial numbers inside this report, so I'm not able to go too deep into the raw numbers, but I'll do my best to break down what the buyback might mean. It's one of the biggest numbers that was available in this report after all. Basically, a buyback is when a company uses its cash to purchase its own shares from investors, effectively shrinking the number of shares available in the market. There are several reasons why companies do this, and it is not always a good thing. One of the reasons a company may do this is that they think that the market is undervaluing the company. This can raise the price of a company by creating scarcity and is a good way to make investors happy. Another reason is that the company is out of ideas on what to do with their money. They may be unable to buy new companies and expand, or are simply stuck and unsure where to turn. The company may be unable to reinvest in its own operations because they are struggling financially. When a company does a buyback program instead of improving its own company, it is because the company thinks it cannot grow anymore. I would be curious to see the next financial report on this company and see if it indicates financial growth or stagnation. If Abercrombie and Fitch's future reports do not have significant growth, I would start being wary of investing in them, and that could indicate a downward trend. If the growth continues, then there is nothing to worry about and you can rest easy knowing that it's an honest sign of market confidence. What is my take? The move seems cautiously optimistic. A $1.3 billion buyback plan sends a strong signal, but the underlying financials will tell the real story. Keep an eye on Abercrombie and Fitch's revenue, profit margins, and growth initiatives in future reports to see if this buyback is justified or just a financial maneuver to boost the stock price in the short term. Thanks for watching. If you found this helpful, please like, comment, and subscribe for more corporate decoder breakdowns. What company should we decode next? Let me know in the comments.